PPA today. Then we're going to go into what is a short-term PPA and what you can expect. We're going to have a quick look at the power and PPA market trends that we're seeing, and then the best way to evaluate and implement a short-term PPA as part of your energy procurement strategy. So you're going to hear from myself. I head up the team here at Zeigo Power in London. I have my 3 colleagues with me. So Mark Chappelle is our Senior Customer Success Manager, Megan McIntyre is our Senior Energy Analyst here at Zeigo Power, and Clive Merrifield is our Business Development Manager. So we are all hopefully going to give you some really great insights into the market today. Please feel free to add any questions to the chat. We will answer them at the end. So please, as we're going through, add them in there and we'll cover as many as we can kind of get through at the end of the webinar. So getting into things. Next slide, please, Steph. Just to set a bit of context as to who we are. So some of you may have known Zeigo for some time, but ultimately Zeigo was bought by Schneider Electric last January. We were fully acquired. And as part of that acquisition, Schneider Electric has gone through a transition themselves. And as part of that, have set up a new business unit, which is their sustainability SaaS solutions, and have adopted actually the Zeigo brand within Schneider Electric. So as part of that Zeigo brand, we have 3 products. The first one being Zeigo Power is who you're hearing from today. The second one being Zeigo Activate, which is our tool for SMEs in order to help them track, reduce and measure their environmental impact. And then thirdly, Zeigo Network is our third product that is very much focused on connecting large corporates with like-minded companies to provide education and access to renewable energy projects and other clean technologies. Next slide, please, Steph. So who is Zeigo Power? What do we do? For those of you that haven't heard of us before, we are the digital procurement platform for renewable energy, and we specialize in PPAs, as I mentioned, now part of Schneider Electric. And ultimately, the platform seeks to integrate technology and human expertise to advance and accelerate clean energy contracting for qualified organizations. We'll kind of come into a little bit more detail on how we help that process a little bit further into the webinar. But just to set the scene really for the webinar today, a few headlines. It probably comes as no surprise to all of you on this call, but European power market prices have declined significantly from the highs that we saw in 2022. And the short-term PPAs have grown in demand as buyers seek price stabilization and solutions to meet upcoming decarbonisation targets. And through 2023, we really do expect continued growth in the short-term PPA activity as decarbonisation goals are coming closer and become more prioritised. So next slide, please, Steph. Over to my colleague Clive, who's going to take you through what is a short-term PPA and what you can expect. Thanks, Clive.
Thanks, Katie. Hello all, my name is Clive Merrifield and I'm part of the business development team here at Zeigo. So I'll be taking you through the next few sections, which are short-term PPAs, what's driving demand, and the benefits for generators. As short-term PPAs are less than 5 years in length, they tend to be signed with operational assets. This is because the financial assurance typically required for new build projects requires a longer term, steady revenue stream. This also means that operational assets can offer relatively smaller volumes for corporates that would otherwise be unable to meet developers' minimum thresholds for long-term PPAs. It's important to note that often short-term PPAs or short-term operational PPAs don't provide additionality, as they aren't bringing new projects online, but they do support the ongoing operation of existing projects, which is a crucial aspect of the energy transition. As short-term PPAs are typically signed with operational assets whose output are known, they carry less volume or production risk. No risk of construction delays or supply chain issues, and less risk of technical issues and unexpected costs. They also allow corporate off-takers to start receiving the power and associated energy attributes certificates, or EACs, shortly after contract signature. This is especially beneficial for companies looking to meet their renewable energy or decarbonization targets in the near term. Short-term PPAs are more strongly influenced by the power market prices than long-term PPAs. This is due to their shorter duration and therefore increased exposure to market price volatility. This tends to result in more frequent negotiation around pricing, which can be both a risk and an opportunity dependent on market conditions. And next slide, please, Steph. So a crucial driver of buyer demand is that short-term PPAs allow companies to better manage their energy costs and supply security in the face of fluctuating energy prices. As operational assets have a track record of performance, they give potential corporate off-takers some degree of certainty regarding the expected production levels, which helps in the planning, budgeting, and forecasting process. Short-term PPAs are more flexible than long-term PPAs. They allow corporate off-takers to react to changes in market conditions, energy needs, and corporate strategy due to their shorter term. In this way, short-term PPAs can also be used as a stopgap solution while sourcing longer-term PPAs. Another key driver for short-term PPAs are near-term renewable energy goals and decarbonization targets that relate to indirect energy consumption and associated Scope 2 emissions. EACs, bundled with short-term PPAs, allow buyers to support these claims in compliance with reporting frameworks. Closely related to this is compliance with government regulation and directives, industry bodies, and reporting frameworks, such as CDP, SBTi, and RE100. Although compliance is mostly voluntary, currently, companies are coming under increasing pressure to decarbonize their energy supply and reduce their emissions to tackle climate change. But it's important to note here that reporting framework guidelines are dynamic. Next slide, please, Stephanie. For generators, short-term PPAs provide a fixed revenue stream that can manage price volatility in wholesale markets. This enables generators to operate facilities that are still functioning efficiently even after subsidies have expired or projects have reached the end of their initial PPA. Short-term PPAs can also provide an alternative guaranteed revenue model for generators, and by securing an off-taker, generators can keep operational assets running and profitable. The shorter time frame of these contracts means there's less overall risk for generators to manage. Firstly, they allow generators to respond to changing market prices more frequently. Secondly, as the output is known, the risk associated with underestimating the performance of a project is reduced. Thirdly, the credit risk of a counterparty is reduced, which is especially important where the long-term financial stability of a potential off-taker is uncertain. Demonstrating contracted future revenues through PPAs can assist renewable energy developers in securing project finance or with attracting investment for future projects. Short-term PPAs also allow suppliers to build strategic partnerships with major companies, which may lead to further opportunities in the future. So thank you. That's the end of my section. We're lucky to have Megan, one of our energy market experts, with us today, who's
Thanks, Clive. So hi, everyone. I'm Megan and I'm the Senior Energy Analyst here at Zeigo Power. And in the next few sections, I'll give you a brief overview of European power prices, what's been happening there, and then provide some data and trends specific to what we're seeing with short-term PPAs. So first of all, this graph probably comes as no surprise to you all. It shows 3 key European markets, and we see not only was last year a year of high prices, but also one of extreme price volatility and fluctuations. Primarily, this was driven by the war between Russia and Ukraine and the subsequent reduction in gas supply, which resulted in gas storage policies and then demand destruction over the colder winter months. The effect of these higher prices on businesses was significant, with energy costs rising exponentially. What this has done is instigate a shift in how corporate buyers are seeking to manage their energy costs during a time where decarbonisation is also coming to the forefront of strategic business priorities. And while you can see that from the start of this year, prices have been on a steady decline, which is explained by demand destruction and lower global demand for flexible LNG, which has allowed Europe to take the majority of that supply. The impact of last year on corporate energy consumers has created a permanent shift, and we're seeing that increasing demand is not only to enter a PPA of the typical duration of 10 to 15 years, but also for shorter term lengths between 1 to 5 years that we're discussing today. If you can move to the next slide for me, Steph. Thank you. So as is presented in this graphic, following a steady and relatively low volume of deals signed for a 1 to 5 year term between 2014 and 2021, there was a significant spike last year. What is interesting here is that while short-term deals increased overall, in Europe, 2022 was actually the first year of many that didn't experience a year-on-year increase of all term lengths signed for PPAs. Now, a probable explanation for this is a mix of developers looking to go merchant for a few years rather than enter a PPA for their operational assets, and then also their grid connection delays and supply chain bottlenecks, which is delaying the COD of new build projects. The increase in the number of short-term deals therefore appears to be buyer-led, as corporates are seeking avenues to hedge against market volatility whilst also decarbonising. And then the developers that are able to are responding to this demand mostly through their operational assets, as it doesn't tie them into a long duration and still provides a degree of stable financing for their portfolio. And then on to the next slide. This graph gives a good summary of where short-term PPA activity is taking place. So as we can see, markets considered mature for the longer-term PPAs also account for the largest share of short-term deals, both in terms of the number of deals signed and the capacity under those deals. And Germany and Spain are the 2 leading markets here. What is interesting is that short-term deals have also been signed on emerging markets such as Poland, and this suggests that a market doesn't need to be mature before short-term demand occurs. But as emerging markets develop, the demand of short and longer terms will most likely grow in parallel. And then on the next slide, so for this section, we'll look more so at data we've seen specifically within Zeigo Power. This graph shows the stability PPAs really provide against price fluctuations. So the dark purple line we see here is the market price in the UK, whereas the light blue are the offer prices that we're seeing on Zeigo Power. It's important to note that the data in this figure isn't specific to short-term prices. However, it's this trend that is supporting the overall increase in demand for shorter-term deals. So towards the right of this graph, we are seeing a closing of the gap between PPA and market prices in the past month. And this really shows the importance that buyers, when they're going Then on the next slide, then also like on the Zeigo Power platform, like overall PPA activity, there was a decline in offers submitted for longer term PPAs last year. And this was in response to increased caution on the buy side about entering that long-term contract during such volatility. In contrast, we saw an increase in the number of shorter term deals submitted by developers between 2021 and 2022, in response to that increased buyer demand for this duration. Again, this links back to the two buy-side motivations we've been discussing. One, that hedging against volatility, and two, securing a PPA to meet those upcoming targets in a market where it's harder to secure a new build project that also provides that additionality. What we're seeing now is that buyers are looking at more of a two-step approach, where they will look to enter a short-term deal without additionality, and with plans to enter a longer-term deal against a new build project once that short-term PPA has expired. And then on to the next slide. Now, prices and start dates do vary for shorter-term deals compared to longer terms, and these graphs talk to the lower level of risk that Clive was discussing earlier. One key consideration for buyers when entering a PPA is the price and the economics offered by a developer. So there it's important to recognise that before entering the tendering process with Zeigo Power, that prices for shorter term deals do average higher than the 10 to 15 years that we typically see. This is a result of a lot of the opportunity costs borne by developers who elect to not capture the current high market prices or those longer term financing options through a long-term PPA, as well as the lower risk profile of the assets typically offered for a short-term PPA, as they're typically already in operation and producing that power, or they're close to COD, which is the commercial operation date. As we see in the graph to the right, Q1 2023 was the most common PPA start date offered last year on the Zeigo Power platform. And this contrasts to longer term deals where the most common start date was Q4 2024. So almost a 2-year difference there. And these two characteristics, the price and the start date, are ones we see differing a lot between the short and long term lengths, and is an area for discussion with buyers, as they are two key elements of that PPA negotiation and their wider business decarbonisation strategy. Then on to the final slide from myself. With all this in mind, why enter a short-term PPA when they're typically more expensive at a time when market prices seem to be dropping? Also, why not just wait to enter a long-term PPA in a few years' time when maybe more projects are available? In short, they're a fast and impactful way for buyers to meet those 2030 targets with a traceable source of renewable power. This allows buyers to show as a leading example in the energy transition, and also ensures the financing of operational assets, which is an important element of the overall transition to renewables, particularly if some subsidy schemes seem to come to an end. Lastly, despite their short duration, they hold significant hedging benefits for corporate energy buyers, which makes them a financially sound investment and a really strong business case to take to senior leaders. So with all this in mind, I'll pass back to Clive, who'll provide more detail on the implementation of a short-term PPA based on these stats.
Great, thanks Megan. So to evaluate and implement a short-term PPA, a company should first understand their current and projected energy demand alongside their sustainability goals and decarbonisation targets. This enables it to decide how much electricity it needs to procure to offset its Scope 2 emissions or meet its percentage commitments of renewable energy consumption, and by what year or date. When prices are volatile, securing a short-term PPA reduces exposure to price risk, but the company must evaluate what proportion of their total volume they want to include in the PPA as a hedge against this risk, and ensure this is aligned with the organization's hedging strategy and risk appetite. The risks of volume produced by different technologies and locations needs to be assessed based on projected environmental conditions and weather patterns, the overall upkeep and age of the facilities, and risks of potential shutdowns due to technical failures and maintenance. Understanding the regulatory environment, laws, and legal enforceability are also important to consider to assess the feasibility of short-term PPAs over the course of the contract. Changes to attribute counting, legal enforceability of contractual infringements, and stability of the market. Analyzing and understanding all the needs, goals, requirements, risks, and opportunities inherent in short-term PPAs facilitates the development of a business case. that can then be used to educate and engage key internal stakeholders and evaluate the potential benefits for the business. Since PPAs require the involvement of multiple departments within a company, and to get ready for a big list here: procurement, sustainability, energy management, legal, treasury, and accounting, as well as the involvement of key decision makers required to sign off the contract, it's especially important these stakeholders are involved in the discussion from the beginning and the evaluation of short-term PPA viability for the company. Once these steps have been taken, it's time to explore the market to find potential generators that could be suitable or could be a suitable counterparty in terms of the requirements, priorities, and preferences that have been defined, such as volume, length, geography, contract structure, delivery type, technology, credit, and etc. Now, this is where Zeigo's digital PPA tendering platform can accelerate the process and help identify suitable partners in the competitive tendering process. Once the offers and potential counterparties have been evaluated and the best offer has been selected, this is where the negotiation of key terms and the PPA contract begins. And next slide, please, Stephanie. Okay, so if you are a corporate off-taker, Zeigo Power provides a platform for you to transact both short and long-term power purchase agreements. It's important at this stage to recognize that Zeigo Power is best suited to sophisticated energy buyers who don't need the support of a consultant. By this, I mean companies that have defined their sustainability targets and renewable energy procurement strategy. They are comfortable running tenders for procuring energy, analyzing offers, and selecting the best one for their business. It's likely they have already completed a PPA and have the decision-making power and stakeholder buy-in necessary to manage the process themselves. Should you feel this is not your current situation, I would recommend you subscribe to the platform from an insights perspective, but engage the services of an experienced consultant, such as the Renewable Energy and Carbon Advisory Team from our parent organization, Schneider Electric, who, alongside Zeigo, were recognized as an industry leader in the power purchase agreement market with the #1 ranking by Guidehouse Insights in 2022. Digging into this a little further, Zeigo's PPA tendering platform enables you to rapidly build and issue a PPA tender to hundreds of engaged renewable energy generators and new project developers throughout Europe. Post-tender issue, the Zeigo platform and team collate the responses and provide evaluation support through advanced data analytics. Ultimately, Zeigo Power enables corporate energy buyers to release the full value of competitive tendering and provides a streamlined process to help you achieve best value. From a developer perspective, Zeigo Power provides a single point of access to large off-taker volumes. A simplified and standardized method of uploading projects and responding to offers. It greatly reduces the workload associated with responding to multiple tenders, and furthermore, Zeigo Power offers a network of corporate buyers that developers otherwise may not have access to. And next slide, please, Stephanie. So this outlines at a high level Zeigo Power's tendering process. I'm mindful of time here, and perhaps it's best we leave plenty of time for questions. Stephanie will drop a blog link into the chat, thanks in advance, which will explore our tender process in further detail. But please do reach out to myself or the Zeigo team if you'd like to discuss this further. So I'm delighted to hand over to Mark, who is one of our longest serving team members and has facilitated many PPAs to completion. Over to you, Mark.
Thanks, Clive. So I will present an overview and summary of an executed short-term PPA completed through the Zeigo Power platform. So towards the end of 2021, the corporate approached the Zeigo Power team with the aim of securing a short-term operational PPA before the end of Q1 2022. After an initial onboarding session with the Zeigo Power team, the corporate began to build out their profile on the platform, starting with inputting details such as their consumption data and contracting entity, with supporting credit collateral for the PPA transaction. Once this information was in place, the corporate is then in a position to fill out our simple and straightforward tender form, which enables them to summarize their requirements for the PPA in an easy and user-friendly format. In this scenario, just to pick out a few examples, so the corporate was looking at a 5-year PPA term. It was under a physical structure, also known as a direct PPA structure, with a baseload delivery preferred and a target COD date of the end of April 2022. The market under consideration for the PPA was Switzerland, which, as some of you may know, is quite an immature market for PPAs with limited solar and wind capacity on the ground and mainly dominated by pump hydro technology and assets. With that being said, Zeigo were keen to explore options for the corporate and release the tender to our generator and developer network on the 21st of January 2022. Within 3 weeks' time, the generators and developers had time to draft their response, upload their offers and bid conditions to the Zeigo platform. The aim being to try and match the corporate's requirements as much as feasibly possible. After an initial round 1 tender feedback session, the corporate then progressed into a further round 2 RFP. Here, the developers and generators were given the opportunity to fine-tune their proposals on the Zeigo platform and provide and upload any additional information associated with the bid and offer. And then the round 2 process began in mid-February, and the results were available by the beginning of March 2022. After the RFP process was closed, there was a clear and preferred bidder, and Zeigo Power facilitated the introduction between both buyer and seller over an initial call. And following on from that initial introduction and conversation, there was good alignment between both parties, both in terms of the conditions of the offer and the general commercials of the PPA. The developer and generator then performed their due diligence checks on the corporate as a follow-up to those discussions, assessing the credit risk, and once content and once they were happy to approve the transaction moving forward, the developer was then able to provide a relatively standardized and concise contract for the short-term PPA transaction to be finalized. And with minimal comments and input from a legal perspective and a willingness to move fast from both sides, the time prior to the execution of the PPA deal was a few weeks, with the PPA confirmed on the 21st of March 2022. As some of you will be acutely aware, complex new build PPAs can often take 6 to 12 months or longer to negotiate and agree terms and go through a full term sheet process and also full PPA contract negotiation process. Here, with respect to short-term PPAs, you're looking at a much shorter time frame, which is more transactional. Although that being said, it's not without its problems, hurdles and barriers to overcome throughout the process. But just to reiterate the points made earlier on, for developers, it can be a good source of shorter term revenue and corporates a quicker method to decarbonize. So that's a summary from me. I will hand over to Katie.
Thank you, Mark. So just some key takeaways really to highlight everything that we've touched upon before we head into some questions. And just to be clear, this has actually been one of our most successful webinar with the highest number of participants that we've ever had, just to really show you kind of the interest in this markets. And actually, we've got representatives here today from the energy sector, from manufacturing, from retail, from utilities, from finance. So it just really shows the interest across all industries with regards to short-term PPAs and the impact that they can have. But ultimately, just to sum up what we've told you really today, the European power market prices have declined significantly. Again, not a surprise from the highs that we've seen in 2022. But despite this, short-term PPAs have grown in demand. And this is as buyers seek, as we've said, price stabilization and further solutions to meet their upcoming decarbonisation targets. And it's no surprise. You all know now, I think, from what we've said, that ultimately short-term PPAs are a key part of your diversification and hedging strategy when it comes to when it comes to energy procurement. They're not the only solution, but they are a key part of your strategy. And one thing really that does remain to be seen is how changes to reporting frameworks will really affect supply of short-term PPAs in the long term. We know we have huge demand at the moment and not as much supply, and we are seeing the gap between demand and kind of supply gradually grow. So how that will continue over the next kind of 12 to 18 months remains to be seen. So hopefully that was really useful. Thank you so much for joining us. If there are further questions that you have or anything that you want to dive into deeper, please feel free to kind of reach out to any of us on this call. But we're going to take some time now. We've got a lot of questions that have come in, so we're going to get through as many as we possibly can in the next kind of 10-15 minutes. And we're hoping we can give you back 10 minutes of your time today, but let's see how many questions we can get through. So Mark, if you want to start directing some of the questions, that would be great.
Yeah, sure. So thanks, Katie. First question I'll probably direct towards you, Megan. So are these PPA prices flat prices, i.e. no indexation?
Yes, so the PPA prices that we showed is including indexation if that is part of the offer. So if it's a fixed price with no escalation, that is the price. But if indexation typically linked to CPI is included, it is the average throughout the duration of the term. So for example, linked to CPI, how we expect that to increase over 10 years, that average price is what is put into those statistics.
Great. And another kind of similar question in that regard as well. So are these PPA prices at 2023 price level or related to the PPA COD year?
It will be the COD, so these prices is what our developers will offer from the PPA start date. So just, I guess that links back to the last question of if it's fixed no escalation, then that is the price for the PPA. However, if it is fixed with escalation, it is again the PPA start date, but the average for the duration of the term.
Okay, perfect. And one question here, are these short-term PPAs only available for physical PPAs or also for virtual and financial PPAs? So in 2023, we have actually conducted a virtual short-term PPA tender on behalf of one of our clients. And there was, responses from developers and generators, there was that product available. So these specific PPA structures aren't necessarily limited to a physical sleeve structure. We can also do a virtual and financial PPA tender on the platform. And what is the minimum volume year to sign off a short-term PPA? So I can start off here, but Megan, you might want to add to this. So it really depends on the market in question, whether it is in Europe, whether it is in the US, or whether it is further east. I've seen short-term PPAs from 1 year onwards. And in terms of minimum volume, I'd say it's a lot less stringent than a long-term PPA, for example, where you're really looking at a minimum volume of 20 to 30 gigawatt hours or more in a lot of our countries across Europe. But yeah, Megan, do you have any further comments on that?
Yeah, not so much to add really on top of that. It is very market specific. What we would do as part of the Zeigo Power process is we would have that discussion with a buyer and engage our developer network as appropriate, depending on where we see the availability for specific specifications of a tender a client is looking to go out to market with.
Great.
So yeah, there's not any hard rules or laws dictating the minimum or the maximum for a short term.
Okay, great. And without the additionality as shown in the first slide, will this be considered as RE? Megan, do you want to take that one?
Yeah, so there is obviously the changes in the RE100 guidelines in terms of whether or not you can claim decarbonisation and those renewable energy certificates. However, an operational asset without that additionality is still renewable energy, and it does still count towards decarbonisation. So you don't need additionality to look like you're decarbonising. It's just something that is often part of strategies because they want to look like they're also helping add additional renewable energy to the grid. But as we were discussing throughout, it's such an important element of the overall transition to renewables that we also ensure financing for these operations that are already in operation. So we're seeing that shift of additionality still being very important, but it's not an absolute must requirement from our buyers now.
Okay, great. And how often can developers change the prices and are offers placed binding? So yeah, so this is a good question. So in the case study I kind of referred to earlier, as a lot of you will know, in 2022 the market was extremely volatile, and in this scenario the price was changing every 3 or 4 hours. So this was particularly tricky to navigate. So what happened in this scenario was, the vast majority of the terms on the contract were agreed, and then the kind of the price point, due to the volatility, it was kind of the last point agreed with the developer, and there were kind of a few refreshes in the days approaching signature. And the offers placed are kind of indicative at first, but once accepted, they are then binding. And then we have what structures are offered as short-term PPAs. So power is produced, power is forecast, baseload. How is distribution according to your experience between those options? Megan, do you want to start with that one, and I'll come in afterwards?
Sorry, Mark, can you just repeat that? I lost you there.
Sure. So which structures are offered for short-term PPAs? So power is produced, power is forecast, baseload, and how is the distribution spread between those according to our experience?
Yeah, so we do see a mix of powers produced and baseload in these offers. It is much more so powers produced that we see. However, that isn't something that's specific to short-term PPAs. For example, baseload is a growing part of the offers we receive between 2021 and 22, but they do make up the smaller proportion of that. So it's not something that is specific to short-term PPAs, but just to give an example of how the trend of pricing structures has changed on the platform that we've seen. In 2021, powers produced made up 98% of all offers we saw, and the remaining 2% of that was baseload. But in 2022, baseload actually grew to account for 12% of all offers we saw. So you can see still in the minority, but that 10% increase was quite significant. And what we were seeing is that buyers were more willing to pay that price premium because obviously more of the risk is on the developers. They typically carry a higher price, but they're willing to pay that more stable price just to guarantee and mitigate the volatility that they might experience in the market. So that is a really interesting trend, but again, is a trend we're seeing across all term lengths.
Okay, great. And a more general question here. So how have you seen PPA pricing evolve over the last 6 months, Megan?
So PPA pricing, more so for longer term, is linked to capex costs, which is the build and maintenance cost of a site. And as inflation is increasing, we are seeing higher PPA prices at the moment compared to what we saw a few years ago. For a shorter term, they are a little bit more influenced by the market, as Clive was alluding to earlier, just because it is something, an opportunity cost that developers have. But they do remain quite competitive, the offers that we're seeing in market. And I think I did come across an earlier question where it asked about, just to clarify, why it doesn't guarantee cost savings for the duration of a PPA. What we've seen just looking from 2020 to this year is the two extreme ends of the market prices, extremely low to extremely high last year. And PPA prices have kind of been in the middle and much more stable for the duration of that. So that's why the prices can't guarantee a cost saving, just because ultimately, even for a shorter term, no one can really accurately predict where the market's going to be in 3, 4, 10, 15 years' time. So that can't be guaranteed, but it's the stability it provides.
Okay, great. And what are the advantages for a renewable generator looking at this route to market? What is the USP of your proposition? Perhaps Clive or Katie, I can pass that over to one of you guys.
I'm happy to take that one.
Off you go, Clive.
The key thing to note here is the commercial tension that we're able to create in the platform. And the platform provides that streamlined process and a direct link to a network of corporate buyers. Now, of course, there are many different offerings in the marketplace, but as part of Schneider Electric and with the relationships that we have in our Zeigo Power we're in a unique position to provide developers with a good route to market. Obviously, we'd be very happy to dig into particular developer questions and go into more details about our unique value proposition, which kind of goes without saying, but is very dependent on the nature of your portfolio, geographies, projects under development, etc. It'd be great to pick up that conversation in more detail.
Great, thanks, Clive. And this is Europe only, or is this applicable to China, India, and the US? Megan, Katie, are you happy to jump in there?
So just from my side, yeah, these stats are all from Europe. That is where we're currently active in the European market. So we haven't done as in-depth analysis with other regions, and particularly a big push for the shorter term is because Europe does have a big push for decarbonisation. So that's a bit, the policy set by governments is influential in business decisions, and also it's an element of Europe having the power price fluctuations in the geopolitics recently. I'm not saying that it isn't possible in other regions. Could very well be. It's just we haven't conducted that analysis yet.
There is a question here, Mark, that I'm going to take actually around market conditions. And there's a question around, are the current market conditions, do we see them more favourable from a developer perspective? The answer is yes, to be honest. This is very much a seller's market at the moment due to the demand that we're seeing. And there are a lot of opportunities for developers from kind of through many different routes. But ultimately, this is an opportunity for both sides, and we do see corporates becoming more flexible with their terms because they have to be. And ultimately, that's what our kind of team in Zeigo Power does. Will help both parties come to kind of an agreement on different kind of negotiating terms and wherever we see issues. So yes, we do see at the moment things are more favourable from a developer perspective. There is one more kind of, I think we have time for one more question, and Mark, I'm actually going to throw this one at you if that's okay. And it's from our experience, what are the main pain points between developers and corporates during PPA contract negotiations?
Yeah, it's a good question. It's really going to depend on a number of factors, really. So The main pain points from our perspective are speed of the corporates. I'd say a lot of this is new to certain buyers. So having that stakeholder buying, having that senior management approval, and the ability to move quickly and make such a long-term commitment for the business can be difficult at times, as well as the legal side as well. So depending on the developer, depending on the corporate, clauses can be negotiated back and forth over quite some period. So yeah, it's just for both sides assessing the risk and how they want to push forward. But I'd say the tender process is very fast on the Zeigo platform. It's when we get into the real paperwork that is the biggest challenge for us to kind of facilitate.
Great. Well, I'm conscious of time, and we want to be able to give you all some time back. So we will be sending out the presentation and the recording to everyone who registered for the webinar. So please look out for that. And as we've said, if you have any further questions or if there's anything that you want clarity on, please do reach out to any of us here, and we'll come back to you. So thank you so much all for joining us today, and we hope you have a great rest of day. Thanks. Bye all.
Thank you all.